Hey, good afternoon, guys. It's 5:40 here on the East Coast, New York, United States. I'm just going to go over a quick, very interesting divergence chart that my partner Rado came up with. Again, all credit for this chart goes to Rado. It's actually on TradingView. I will share the link to this TradingView account when this video is over. But really quickly, as you can see, this is the Stotch RSI. This is the weekly chart. As you can see, there was a first divergence here. This is all bearish divergence with higher highs on the RSI or the stock RSI and lower highs on the price, which is always bearish. Now you can see the first one we had was between March 5th, 2018, when we had this big dead cat from 5,800 to 10,000, or actually almost 12,000. I remember that. I caught the top of that. I had the top at 11,660 and just basically nailed that. But it was almost over a year ago now. But this was your first divergence here, March 5th, 2018 to April 30th, 2018. You can see we put in a lower high on the price, very drastic higher high on the indicator here. On the second one actually started from about the same time, which was about a month later, May 7th to July 30th. Same thing, lower high on price, higher high on indicator. Now, this is what is truly disturbing here. If in other words, if the RSI closes here above this area, that would signify the biggest divergence that we've had, or the fourth one in a row. And I mean, you can see this massive divergence here with lower high, and this would yet again be lower high with a higher high on the indicator. And just to kind of explain that, if some of you guys don't quite understand what divergence is, basically all divergence is it's showing that, especially in these indicators, it's showing that it's taking more strength out of the bulls and out of the market and out of the volume and all those things to produce a lower price. So it's indicating just a general overall bearishness of it's taking more energy to produce a lower price. So basically that's all that's showing, but this is very disturbing, and I will actually read to you what my partner has written about this. It says, so as we can see, there's potential for the biggest bearish divergence on the weekly chart from $20,000 until now. I will not be surprised if I see a new low at around between $1,800 and $2,200 Bitcoin price. That also will follow my bearish Elliott wave count, which in fact I will now go over with that. I also, interestingly, last week showed the same divergence, but on the daily chart and on the regular RSI, not on the Stotch RSI. So I will actually go over to my chart now. See if I can actually stop screen sharing for a minute. And change, yes, here we go. Okay. This is what I wanted to show you guys. All right. Now let me go over to Okay, this is basically the same idea, except this is the daily chart, and this is just the normal RSI, just the regular relative strength index. And as you can see, it's the same thing outlined in green: lower high in price, higher high in RSI. It's in green, it's in yellow, and this is threatening to be yet another bearish divergence here. Now, this is not printed yet, which basically means that if the price can push up here like this, we will have obviously a higher high on the indicator, but we will also have a higher high on the price. So that's okay. That's not divergence. But as it sits now, this is bearish divergence. In other words, if this is the top, and now mind you, this is on the daily chart, and you can see what all these other divergences led up to here as far as the direction of the market. Now, one of the things I also want to go over really quickly is you can see I have this trend line drawn. To me, this trend line, I don't think that Elliott wave is helping anybody at this point. There's like 6 different counts that are valid, and they all have they basically they're split up into which direction this next move is going to go. So I don't think that that's helping. So I will go over the bearish count that my partner was referring to that does match up with this divergence, just because that was part of his analysis. But again, and I've covered this in my last video, this trend line to me is everything. This resistance here, there's really no support. There's no ascending support. I mean, there's horizontal support, but now I have actually taken this. I drew this trend line just as, you know, basically we were kind of channeling here, and I would expect this area to hold, which is roughly, you know, 2200 and climbing. But for how long it will hold, I don't know, but I'm sure that this would create a decent bounce. This interestingly enough, also corresponds to this bearish Elliott count. But in my opinion, this trend line is everything here. If you can kind of just throw all other TA out the window, if we, like I said, if we can get up to this trend line, I think we will break it to the upside. We will fill in this volume void here. As you can see, there's just nothing but air here. And that's why we just crashed straight through here without stopping, because there was no support built up here on the way up. I mean, we just went straight up. I mean, this move was in about maybe a week or 2 weeks. We went from, you know, 4,400 to almost $8,000. It's almost 100% increase in a week to a week and a half without spending much time. So anytime that happens, you're going to create a pocket of just void of volume. So I think that if we can get up to this, past this trend line here, I think we will make a very nice bullish run up here. I still think that chances are the bull market is not over. I mean, the bear market is not over, even if we do that. But just from a factual standpoint, there's nothing but air here as far as resistance, which I have covered in the last video. What I also covered in the last video, which is playing out pretty well here, I'm just going to switch back over to the 1 hour. Okay, I'm actually going to get this. Now, this is actually bullish divergence here. If you can see this, we have a higher low on the indicator and a lower low on price. So this, as it sits right now, is bullish divergence. You can see exactly what I'm talking about. Higher low on the indicator and lower low on the price. So as this sits right now, as long as this area holds, this is bullish. This is a bullish divergence. Now, that does not mean that we can't go lower. That just means that there's a nice bit of evidence here that we are, in fact, going to start to bounce here and start to push up, which, in fact, I was talking about yesterday when I talked about the possibilities here of an ABC pattern, which actually this would be the end of the A, B, C coming in at a lower price. And if this plays out here like this, this is bullish. This is a bullish count here. If this plays out in this fashion, where we push up, then come back down, put in a lower low, for a couple of different reasons. And the main one is that this would basically be, I'm actually going to take the RSI off right now just because it makes it easier for me. But basically what we would have here is five wave here, ABC, which this would be an ABC, and I'll show you what else it can be in a minute. But to put in a larger degree, 1, 2, and then we're going to go up for 3, 4, 5. I'll actually move that in a second, but I do want to, I'm actually going to show the wave, and I want to change the degree here to, I'll change it to intermediate. But something like this, this type of move here, and I'll just quickly change over to the 4-hour. And basically what this is, what this would be in the larger degree, if this is to play out, would be a very big A, B, C for our fourth wave coming down for our 5, which lines up absolutely beautifully with touching this trend line here at about 2,400. So that is the bullish count as of right now, or one of the bullish counts. Now, I will cover really quickly the count that my partner and I am actually leaning more towards this count that I'm about to show you now, even though it is very bearish. You know, it doesn't matter. It's about what's technical. So this ABC is the bearish count, where this was a flat correction. This ABC is over, and we are going back to impulse and back to the motive wave, or the true trend of the market, which has been bearish and is bearish until proven otherwise. So what this count would entail is ABC finished, correction over, dead cat bounces over, and here we go. This would be the one that we put in. We're going to come up for the 2, down for the 3, 4, 5. And in fact, this, as you can see, now I just freehand drew this, so don't really take into account these targets here because I didn't measure them with fib or anything like that. And quite frankly, it's too soon to know. We have to at least put in a 2 here before we can get some kind of idea as to where the 3 is going to go, the 4, the 5, etc. But we're looking at generally in this trend line vicinity here. So that is the bearish count. That is the bearish count that supports those divergences that we just covered. As far as that, now the last thing I want to go over really quickly in this video is one of the things that I'm seeing a lot on YouTube and a lot on Twitter, which also supports this bearish count, is I'm seeing a lot of people drawing an ascending triangle like this, which, if you guys know, excuse me, let me get rid of this so that this doesn't confuse you guys. Basically, you know, just freehand drawing real quick. This is an ascending triangle, and this is what a lot of people are looking at. And this is a bullish formation, and this is what I'm seeing all over YouTube in the past couple of days. And I actually saw this a week or two ago, and I said to myself, everybody is going to see this as an ascending triangle, and everyone is going to start becoming bullish here. And what we're going to look for, if this is to play out, is a breakout to about this area, 51, 5,200, which does in fact line up beautifully with this first area we dead catted from on the drop from 6,000. So technically speaking, this does make sense to test this area as resistance, because it did offer some support as a dead cat area and then come back down. But my problem with this triangle is Elliott, just from an Elliott point of view, it really doesn't make sense unless basically this is a bullish triangle. So to have a bullish triangle, it basically, to have a triangle period in Elliott, is it has to be in the fourth wave, the X wave, or the B wave. And the only wave, in my opinion, that this can be here and play out as a triangle, a bullish triangle, mind you, would be the B wave. So basically we would have this whole triangle as a B, C, and basically the way that this would be labeled here would be A, B, C, D, E, failure. So the E would fail to the downside, and we would have this breakout up here like this. From an Elliott standpoint, that's the only way that this triangle can play out, because it is a bullish triangle, and there isn't, basically a triangle has to be in 4, B, or X. So this would have to be A, B, C. The triangle is in fact the B. In my opinion, it is way too early for this to be labeled as such, but there is that possibility. My main problem with this triangle is that in order for this trend line to be valid, I mean, there's only 2 points here. There's our low and our second low. There's, you know, so to be calling this an ascending triangle at this point, it's way too early. And if you were to, in fact, you know, really pull this, I mean, I would put it here. And this is more of a bear flag symmetrical triangle. But, you know, in any event, this is what I'm seeing a lot of. And anytime you see everybody leaning on one direction of the market is almost certainly going to go the other direction. So I'm starting to see a lot of bullish comments, a lot of bullish sentiment. And, you know, so that's just something to be aware of. The other thing is that if you zoom this out to the 1 day, let's get this out of here. Let's get this out of here. Okay. Just wanted to point this out here. Okay. Where's our support as far as volume? We unfortunately broke through this area, and we've made this area less significant now. Yes, there is the 200-week moving average, but we've made this area less significant. And I've been saying this for about a year and a half now. The true support of Bitcoin is right here. This is the accumulation zone. This is look at this volume here. This is extremely strong. This and the top of it is at about 1200 area. So I'm not saying that we have to go there, but I'm saying if you just look at this chart, where does it look like we're headed? If you just totally from an objective point of view, you know, unfortunately, a lot of people have this bear market ending around 28, you know, 2800, 2500. Unfortunately, look at this void of volume here on the daily chart. There's really nothing. There's really nothing here. There's no support here in this area. And we've already broken and chopped through this area here. So, you know, I mean, remember this area, this void? Look how we dropped straight through it. Now, this one is even worse. This area here is even worse than this area. It's more open air than even up here. So you see the action that happened here straight down. So, you know, that's something to keep in mind also. You know, but you know, that's really all I wanted to cover for today. I'm gonna again try to keep these short, but my partner wanted to share that divergence chart with you guys, and I also had stumbled upon the same type of thing with the RSI, so I wanted to point that out, and I also wanted to point out this ascending triangle that everyone is, you know, getting very excited about. So, you know, but that's about it. I'll possibly make one a little later, but that's all I have for you guys for now. Thanks for watching. If you like the content, like, subscribe, share. Any input is greatly appreciated and respected. And I'll talk to you guys next time. Thank you. Bye.